Good morning. I am Malik. If you are listening to this, you didn't just survive Black Monday, you witnessed a crime scene. Yesterday, I told you the floor was 185,000. The market didn't just break that floor, it smashed through it, fell into the basement, and kept digging. Closing index, 182,384. Days loss, minus 2,025 points. Volume, 1.05 billion shares. Now, I want you to pause and really understand what happened yesterday. Because if you don't understand why you lost money on your safe stocks yesterday, you are going to lose the rest of it today. Yesterday, the refinery hedge failed. A talc refinery, ATRL, dropped to 737.29. OGDC fell to 289.88. National Refinery, NRL, slid to 437.70. I received hundreds of messages last night. Malik, you said energy was safe. Why is it red? Here is the answer, and it is the most important lesson you will learn in this bear market. In a liquidity crisis, correlations go to 1. When a broker issues a margin call to a big fund, they don't ask, which stock would you like to sell, sir? No, they sell what is liquid. They sold your OGDC and your ATRL not because they are bad companies, but because they were the only things that had buyers. They sold the winners to pay for the losers. This is what we call a liquidity black hole. Now, let's talk about today, day 7, Tuesday, January 13th. Wall Street has a cute name for today, Turnaround Tuesday. The theory is that after a massive panic on Monday, bargain hunters step in on Tuesday. You will see green on your screen at 9:45 a.m. Systems-led, SYS, closed at 161.48. It might tick up to 165. TRG closed at 74.95. It might push to 76. Do not fall for it. This is not a recovery. This is a dead cat bounce. Let me explain the physics. If you drop a dead cat from a 50-story building, it will bounce when it hits the sidewalk, but it's still dead. The market dropped 2,000 points. A 300-point rally today is just the algorithm squaring their positions before the next wave of selling. Why am I so sure the selling isn't over? Because of the Saudi leak I told you about. We are seeing massive off-market transactions in the banking sector. Bankallah AHBL, and Mizanbank, MEBL, are seeing huge blocks change hands below market rates. This is the foreign funds exiting. They are raising cash to deploy into the Saudi market on February 1st. Until that outflow stops, every rally is an exit opportunity. Let's look at the calendar. In a crash, news is dangerous. Today at 10:30 a.m., we have a board meeting for Shakarganj Limited, SML, in Lahore. Agenda, matter other than financial results. Now, in a bull market, you would buy this rumor. You'd think, oh, they are selling land or a buyout. In a bear market, you assume the worst. Matter other than financials usually means debt restructuring, bad, selling a unit to pay off loans, desperate, rights issue, dilution. The strategy, if you see SML spike at 10 a.m. on rumors, short it. Or if you own it, sell into the strength. Do not hold through the announcement. In this environment, the market punishes uncertainty. If the news is even slightly vague, the stock hits the lower lock. I want to talk about the hardest trade in the world. It's not buying, it's not selling, it's doing nothing. Right now, you are feeling the urge to make back what you lost yesterday. That urge is your enemy. The market is currently priced at 182,300. The next major support is 178,000. That is another 4,000 points of air pocket below us. If you buy WorldCall today at 1.83 thinking it's cheap, you are catching a falling knife. If WorldCall goes to 1.50, you lose 18% of your capital. Cheap can always get cheaper. My specific instructions for your portfolio today. The toxic list, WorldCall, K-Electric, Synergyco. If you have them, use the morning bounce to reduce exposure. Do not average down. The hold list, ATRL and OGDC. Yes, they fell yesterday, but the fundamentals of the Malacca blockade haven't changed. Diesel margins are still record high. These stocks will recover first. You hold these with diamond hands. The buy list, none. Today is not a buying day. Today is a watching day. The verdict for Tuesday, the market is broken. The psychological safety net of 185K is gone. The Saudi capital flight is real. The Malacca choke is real. You are not a trader today. You are a risk manager. Your job is to protect your capital so that when the bottom finally comes, maybe at 175K, maybe at 170K, you have the cash to buy the kingdom for pennies. Ignore the green ticks at the open. Watch the volume. If the rally has low volume, it's a trap. Stay liquid, stay paranoid. I'm Malik. See you on the other side of the close. Good luck. Disclaimer: StockSense is an educational platform. I am an analyst, not a financial advisor. The strategies discussed here are based on data and market speculation. The stock market is a high-risk environment. Do not trade money you cannot afford to lose. Do your own research.